welcome to in this video. In this video, we are going to discuss about the securities and securities market, in which includes the equity securities, debt securities, derivative securities, mutual fund. So let's get start this video. So we are going to know this all things in detail and very good. So let's get start this video. So equity shares or a common share, commonly known as the shares, represent a share of an ownership in a company. An investor who invests in the shares of a company is called as shareholders, and is entered to receive all the corporate benefits like the dividends sorry like the dividends out of the profit of the company. And the investor is also an entitled to receive the rights to cast a vote with a regarding to the decision making process of an company at a general meeting of a company. Okay, so equity shares are commonly known as the shares. Okay, so equity shares are the shares in which a particular investor, individual or group of individuals or in companies invest a money in a company and receive in exchange of the money they receive the common shares or preferable shares, which the common shares are common shares of a company represent the ownership, and the persons who hold these shares are called as equity shares. Okay, hold they are called as the shareholders, and they enjoy the corporate benefits like dividend, profit of and out of profit of company. And the investors receive the right to vote in making decision in the general meetings of a company. Okay, next we study about the debt securities represent the money that is borrowed by an company or institution from the investors and must be repaid to the investor due to the debts are also called as the debentures, bonds, or an investor who invest in the debt securities is entered to receive the um, entitled to receive the payment of interest coupons and the repayment of the principal. The money uh, invested debt securities are issued for a fixed terms at the end of which the security can be redeemed by issuer. Often securities a security and debt security can be secured backed by the collateral and unsecured. So here it is saying the debt securities are also called as the bond debentures. Okay, are commonly known as okay debt securities. So the debt securities represent the borrowing money by the companies from the investors or the uh, from the market to fund their projects. So the persons who invested in the debentures and bonds receive the interest, or we can also call the coupons, as the profit paid on the principal. So principal is paid at the maturity of the bond or securities, which has the fixed term period. And some bonds are also has the um, perpetual existence. There are uh, perpetual age. Okay, so the bonds and debentures are aged from 5, 10, 30, 25, like this. Okay, so here it is saying that the debenture the debt securities are redeemed after a fixed period of time, which is maturity, which is redeemed by the user of the issuer of the security, debt security. And the debt securities are two types: secured and unsecured. So secured is the collateral backed security, and unsecured is the non-collateral backed security, in which the if the collateral backed security is there, then the interest rate will be low, and if it is not backed, then the interest rate will be high for the debt security. Okay, so next we move to the uh, derivatives. So derivatives are financial instruments who invested depend the financial instrument whose value depends upon the value of another asset, such as shares, debt, securities, commodities, etc. are the main types of the exchange traded derivatives and the futures and options. So derivatives are the financial instruments whose value is depends. Okay, so derivative is that financial instrument which price is dependent, which value, or we can say the price is dependent upon the another assets, like the debt securities, or we can say the commodities. So there are so the main type of exchange traded the derivatives are futures and options. So as we came, if you are if you are doing the secondary market in investing in shares, then you know very well known about the derivatives, which is exchange, which is the futures and the options. So in options there are again two, that is call option and put option. If you want, then I will create a whole dedicated full video about the derivatives. Okay, so just comment below. Okay, next we talk about the uh, mutual funds. So mutual funds are the type of financial instruments made up of a pool of money collected from many investors. These funds, mutual funds, that invest in securities such as shares, bonds, money market instruments, and the other asset classes. So the mutual funds are the funds in which the investors are pool their money to invest in very in different asset classes, like the shares, bonds, and money market instruments and other asset classes. Okay, so now you know about the mutual funds. In mutual funds, the individuals can also invest. Okay, so next we see what is about next. The securities market is place where the companies can raise funds by issuing securities such as equity shares, debt securities, etc. to the investors publicly investor public and also is place where the investor can buy or sell various securities like shares, bonds, etc. Once the shares or securities are issued to the public, the companies is requested to list the shares or the securities on the recognized stock exchange. So securities market is those a part of a capital market. So here it is saying this. Here it is saying that security market is a place where the companies come to issue to raise their funds by issuing their securities such as the equity, debentures, bonds, and many more to issue to raise the funds to finance their projects of the company. So the once as well as this is the securities market is a place where the investors buys the various types of securities like the shares, bonds, debentures, and many more. So the securities market is once the issuer issues the securities in the securities market, then that should be registered. Then that should be listed under the recognized the securities exchange. Like the if a company issues its shares to the public, then recogn- the shares should be registered under the recognized stock exchange. Okay, so next here it is saying that securities market is a part of the capital market. Okay, so securities market is those a part of a capital market. Okay, next the primary function of the securities market to enable allocation of allocation of the savings for an investor to those who needed it. This is done when the investor makes so primary function of an securities market is to enable the allocation of the savings for investors and those who need it. Okay, so the primary function of the securities market is to allot to available to enable the investors to in allocate their savings in uh, various um, asset classes in the uh, sec- secured securities market. Okay, and for those who need it. So this is the this is done when the investor makes investment in securities of companies entities within with which are in the need of the fund. The investor are intended to get benefits like the interest, dividend, capital appreciation, bonus shares, and such investors investment contribution to an economic development of an country. So the the investor who invest in these securities market get the more benefits like the uh, dividend, capital appreciation, dividend bonus shares, such get the benefit for the investors, and the investments helps to contribute an investor to an economic development by investing in the companies of an um, home country which develops the economic of the home country. Okay, so investment is very much necessary for every country's development in economic. So let's see next what is so securities market has two independent and inspire ins- and inseparable segments which are mentioned as below. So securities market is divided into primary market and secondary market. So primary market is the objective is to raise the fund, including the issue of new securities, those IPO, which is initial public offering, and okay. So here it is saying that um, so here we see that the in the primary market the objective is to raise the funds from the investors. It includes the issuing of securities for new issuing of a securities to the IPO, which is the initial public offering. IPO's full form is initial public offering. Okay, next we see here that in which see primary market is a place where the first fresh issue of the shares are going. Shares, debentures, bonds are firstly newly where the company itself issue the shares through IPO to the investors in that bonds or securities whichever the company issues fund once. And the secondary market is the place where, okay, wait. Secondary market is the place where they, once the company issues its shares, securities for the public, and the public buys it, then that shares are goes to list on the recognized exchange board of that country, so that that securities are traded on the exchange, which is the take place between the company, not take place between the company and investor. It not take place with the from one investor to another investor. So that is the secondary market. Okay, so here it is, see the capital appreciation objective of the secondary market. In the primary market, the objective was the to raise the fund to the company. In this, the objective of the secondary market is the to capital appreciation of an investor's objective. Here it is the investor objective to appreciate is the its capital. It includes the future trading, it includes the further trading of an security already offered to the public, just as explained you in this. Okay, next we see. Okay, here, here we has been studied about the securities and securities markets. Okay, now in next video we are going to discuss about the primary and secondary markets. So watch our next video. So my name is Lokesh Kokar, and in this video, this is only we meet in our next video. Thanks for watching, and we see you in our next video. Bye bye.